right. Good morning, good peoples. Let's jump in here on GDXY. All right. Well, I'm not upset like I was yesterday. I just let it pass for now. Um, but one of the things I wanted to do for you guys, a couple people asked me. So I'm going to share with you in this sector the things that I currently own. It's not everything I own. The old saying is, tell them mostly what you know, but don't tell them everything you know. So that's kind of what I'm doing. But hey, it's a heck of a lot. And showing you some charts, showing you some upgrades. And I'll continue to do that because this sector has a special place in my heart because I did so well in the last decade when it ran and I was able to retire early. So I look forward to it. But I analyze everything I do and I love these yield stocks. I'm just a little frustrated when they don't execute. So the way around that is just own a lot of high growth stuff when it's really running. That's the way to play this. So let me jump in and catch you up. Not much happened yesterday. Remember, they rolled out of everything because they got caught in not a good situation. They got caught by writing strikes that were way too low that they really shouldn't have if they had any awareness um, of what was about to happen and what likely will continue to happen. That's not to say we don't get pullbacks here because in volatility, I mean, all you have to do is look at Nvidia or Tesla and you see the impact of those pullbacks. They can happen at any time. It doesn't mean those stocks don't have a lot more room to run on the upside because they clearly do. Okay, so what happened yesterday? 3809 to 3817 in GDX. So 0.21, and we moved up 1911.16. So it was up higher on the day, and I think it pulled back. But these are breakouts for GDXY. There's no question about that. So looking on the weekly, we're already past the 38 one, but it's the small one. I we'll be lucky if we don't run right past 39 in the week. I mean, anything can happen in a good week, but I could see us at 42 or I could see us at 38.99. I mean, honestly, it's just hard to predict, but these things are ready to run. So it wouldn't surprise me that we go up to 41 or 42 and then we get killed again on our weekly. But at least we're positioned in the synthetic at 37. But I just hate to see the weekly pull down all those gains in the synthetic. So that's why I own and have a lot of other plays. So I'm going to start sharing with you guys. Again, this isn't for everybody. Somebody that bought the fund and you want passive and you just want some income, then at the end of my presentation, if you will, on what happened to GDXY, then just leave. Don't set. And for those that want to hear it, which I have been asked, I'm going to do it. And eventually I'll take this off to its own and I might even create a membership site for it because I think over the ensuing years there's a lot of money to be made for those of you that want to be a lot more active in this. Again, it's not for everybody. Some of you are just want yield and you want your yield and I don't blame you and I'm going to continue to report on that. So here we are above the 38. Clearly we've broken out. Okay. So let's look at, see if there's anything else in here. No, that's all I had for that. But again, we're not positioned well, right? Because this is already run on us. Let me look. Yes. Okay. So let's go over to holdings because that always tells a lot more. All right. So even with the small move up, whoops, I thought I updated this. 700. Oh, I see what I did. 700, 148. and 306,556. That was it. I just left out a digit, guys. I knew I did this. So 393, yes, that we won, right? We were 365. We were 73. We were minus 365. So we're getting it reflected in the synthetic slowly. We're just losing on the weekly calls. These have been updated for the 712 close. So you can see on this guy, we're 32.5%, but we got a whole nother week, you know, a whole nother week. I think it's going to be a hard press to keep it down. But let's see. Again, I'm not going to judge until I see. This guy we've already run by, right? So it's going to cost us, it's costing us right now 15,000 on 8,000. So this thing, if we did run to 42, you can see all of a sudden this costs us $4 to buy back, right? So we're going to spend 5 or 6 times what we collected. So that's the danger when you don't look at the fundamentals and the technical analysis of the fund that you're covering. You know, nobody said time the market, but just have some awareness, if there's breakouts going on. That's all I ask. I mean, I don't want them to try and predict every single move. But when you just have a script that's just yielding, harvest yielding, it doesn't play well when these things get going. That might have played well for the last couple of years. It's not going to play well for the next couple of years. It's just not. So we have to do other things, or you have to move to another fund, because if these guys are going to repeat this, it's just not going to be a good outcome. All right. So again, not to keep going on that. Let's, because I'm going to go into all my other stuff. So it closed at 1911. They're saying fair value is 1908. Nobody bought into it. And unless it runs up above 20 and runs to 25 and starts paying out $1 and stuff, why would people choose this fund, right? Yet I know that this sector is going to pay an awful lot of money to people that pay attention. And I got a lot of good data for you guys. All right, so here's the payout story. It's not pretty, right? Now you know why I was so upset the other day. Nothing changed here. No trades, right? No money flow in. We got an 84-cent total loss, and 52 cents are coming from the short calls, which we just got murdered on, right? And honestly, it doesn't look better. Now, we might get lucky, but so what? We've already collected the money. We're only going to end the week at this at best, right? Unless new money pours in and they put on new trades, which will be in a better position. So let me go over here and talk about some of the things. I'm going to talk about some that I own. Okay, so that I can help you guys. And again, part of this is coming from people asking me. I'm not just trying to say, I know this and I know that. People are asking me. So I've mentioned a few times in my videos that part of not being so upset is I've been killing it on Newmont, because I knew that Newmont would get a massive re-rating eventually from the analysts. Why they're waiting so long, I have no idea. So I started buying calls on Newmont back in April, and I bought out to September, seeing that this move was likely a July, August. And we may top out in August and pull back in September and October and then run the final 2 months. Again, you can't time it perfectly, but when you know that gold's near all-time highs and these miners don't reflect it, and they're going to report fantastic earnings, and then you watch after the earnings, they'll get more upgrades. The only thing that's going to kill it if gold goes to $1,000, which I think there's like 1/10 of 1% chance of that happening. So Anikio Eagle, love this company. I own it back at $48 to $50, right? So I always felt guilty telling people, but analysts came out, last week, and I think the target was 117. So this thing gets silver, it gets gold, it gets other minerals. This is a well-managed company. Both of these companies are top 10 holdings in GDX. They're large companies. They're not going to go out of business. There's very little risk. Even geopolitical risk is reasonably managed because mostly they're in friendly jurisdictions. You go down to Peru, and I'm not picking on Peru, but you go down to any Latin American country, and you never know when a leftist government gets voted in, and they say, hey, that American or that Canadian explorer, you know what? We're going to tell them, I know we signed an agreement that they can mine for 5 years and they give us 15% of the profits, but you know what? I'm greedy. We've got a lot of inflation here. I think my constituency base would be happy if I just kicked them out of the country and we took over the mine. So they've done it before. So you have to be aware of geopolitical risk when you're in the mining business. So I always look at that when I consider investing in a single stock. And so ETFs are always better, but I tend to know which ones have the biggest risk, right? Skeena is a smaller company, but they've really broke out of a long base here. And the longer the base, the higher the rise when they break. They're at 683. I think they're at $13 sometime next year. So, it's a terrific company that's well managed. Mag Silver, another silver player. Win Silver, Silver's at, 30, 29, 30 and a half, 31. I mean, 30 is becoming a base. When it gets above 33, 35, this thing, it's going to run to 50. It could happen in 2 months. It's just long overdue. I mean, it's been 50 in 1980. It's been 50 in 2011. So this thing, and you see huge deficits in silver because it's used in solar, it's used in munitions. I tell the story all the time. Huge deficits in electric vehicles. Hecla, these are traditional long-time silver miners, Hecla and Coeur d'Alene. Now it's Core Mining. But these are silver plays that the public and the retail and institutions just pile in when they see silver running. They're not even the most efficient silver miners, but they're going to get a lot of money flow. They're long traditional miners for 30-year history of mining silver. Pan American Silver is an excellently managed. So I just wrote silver play, not to say others aren't silver play. Anglo Gold, another great global mining company. This thing could back test. It broke out 29.50, and I put the close price on Friday close. This thing could get a little gap. I mean, some of these you can get cute with, but I think where they're going, you can just buy them, and like AEM. I wish I was telling you to buy this, 6 months ago, but there was no GDX. There was no GDXY. There's no reason for me coming in here and talking about yielding stocks. And normally I wouldn't be doing this, but I think there's a lot here that can help you guys. Just one of my loyal subscribers asked me the other day what I thought of EXK. I own it. I've been in it for a while. Again, I feel guilty in saying I bought it in March, right? It was super low. It's been a fantastic company. It's just these things go up and down and they trade with the market, and silver will make a move and then it'll retrace. And there's more silver shorts than there is silver production out there. Some of these banksters just, and I'm not one to say that there's this, shenanigans, but look at JP Morgan has been fined millions of dollars for spoofing and for finagling, if you will, the silver market. And they pay the fine happily because guess what? They made a billion or so in doing that. So what's 100 million that's a slap on the wrist? I mean, they're the custodian for gold and silver for the US government, for these SLVs and GLDs, Makes me wonder sometime they're just moving the silver from one bucket to another bucket and saying, oh yeah, we got it. But the truth is they're shorting silver they don't even have to keep it down, right? But what eventually happens is the banksters want to go long, and then they stop the spoofing and they stop shorting it when they're all loaded up and ready to let it run for a while. But basically, the shortage is just driving it up to where now the Chinese, the Indians, they're creating their own markets. They're no longer depending on the CFTC, right? They don't want the U.S. commodities market. I mean, basically, if you talk about anybody who knows about silver and history, and then I'm going to finish this, but just let me go on this little rant. So everybody's probably heard of the Hunt brothers way back in the late 70s and 80s. Well, the Hunt brothers were gonna bunker and whoever the other guy was. I knew the names at one point. They wanted to corner the silver market, and they knew silver was undervalued. So they literally, I don't think they were a billionaire at that time, but they were some of the wealthiest people in America at the time. They just bought silver like crazy, bought it and bought it and bought it until the Commodities Future Trading Corporation, the management, was in a bind. They controlled the silver market. And so the CFT said, okay, you think you got us cornered, right? They just came out and said, okay, starting tomorrow, the silver market is open for selling, but we're not taking any buy orders. What? You got to imagine that in the stock market. If the stock market came out and said, okay, guys, the market for NVIDIA, the market for MISTI, MSTR, there's no buying available. You can only sell if you own it, but you can't buy anything. So it was a rigged market. I mean, within 3 days, the Hunt brothers had massive margin calls. They had to give all their silver back, and silver just literally, I don't remember the price drop, but I think it went from, that $49 to $50 down to $10. I don't have the chart in front of me, very quickly. I mean, and the only way they could do that was to cheat, right? Because they had lost control. Okay, so another company, I still think of that and I laugh to myself. We'll show you. Okay, Dolly Varden. I don't normally like to bring up these little guys. Here's a lot of, and I even bought into this logic, 6 years ago in the last run. Well, if you pick a lot of these little cheap explorers, you can find a 50 bagger. And you probably can if you bought enough of them. But I get tired of seeing some moose pasture and they throw a name on it, Johnson Silver, when Johnson's just some old guy that had 3 cows on it, and some con men bought the little farm acre and said they're a silver exploration company, right? And when silver's in the height of running, somebody will buy it and they'll run the stock up 7 times only to see, the Ponzi scheme. So I'm always careful. But Dolly Varden is a miner, an explorer. They've shored up in a safe jurisdiction some very large grade silver. So it's worked out for me. I'm 2 or 3x up from what I put into it. Again, treat this as what it is. It's a speculative play, right? So if you want to throw a small amount of capital in it, you could get a 10x in this thing very easily. Am I saying you will? I don't know. I haven't sold any in my 2.5x, right? It's 84 cents. So it's not Johnson's cow where the management, the management is legit. You always want to find out who are these, who's the management team behind the company. Have they successfully brought an explorer company, there? So, there's money to be made in these. And then the last one, before I jump into ETFs, PLG. I've told a couple friends, I've told a couple people that asked me in the Discord. So, what the play here is platinum in particular. If anybody has a long history with platinum, you know that platinum is typically has a premium to gold. Well, look at it now. It's like a third of gold, right? So it's going to revert to the mean. It's going to go back to where it should be. And as it does, it's going to explode up. And palladium and platinum, there was another big, in the vehicle market, we're no longer using catalytic converters. It's all electric vehicles. Guys, that takes a while to convert that all out there. As bullish as I am on Tesla, but I'm actually so bullish on Tesla, it's because of the other things besides the car, right? The robo-taxi, the humanistic robots, the neural network, and the things they're doing there. So I think they'll get a double in 5 years just from their current price, just based on their car, if they're successful with their car. But it's the other components. But at the end of the day, platinum and palladium are both massively undervalued. So this, I own this around $1.60. I bought it a couple months ago, and within like 10 days, it ran to 207. I didn't sell any. And then it pulled back in, another couple of weeks to $1.60. And I said, maybe I should trade it. But I've been so busy with my channel that I really haven't. So to me, this still represents value. I think you can load up on this thing. I think it's going to be a little bit slower than gold and silver. But I think when it moves, it could be a month before it takes off. I think this $1.70, look at a chart back in 2020. And there's really not, this thing could be $6 easily next year. So to me, that's something I want to buy and hold. Again, these aren't income, right? They're growth plays. But I'm just telling you because I'm a little frustrated. I'm still going to own some GDXY. But if these guys keep handling it, and then if you saw anything on Misty today, I wasn't real happy with that. But don't get me started. I'm not going there, peeps. Okay. So what about ETFs? Because again, I did options on Newmont because they're so big. I'm up 5x on those, and I haven't sold them. I probably won't sell them until I see probably 55 or 60 on Newmont, because they're out in September, right? The third week of September. But, I'll have plays, and ask me. Feel free in the Discord and places, if I think this, if I think that. So how do you get physical silver plays? Because silver will run from $30. My guess is over. It should have 3 digits in its play within the next several years. I mean, silver needs to be in the hundreds, because this shortage isn't going away. It's millions of ounces, and it's had 3 consecutive years. We've never had that kind of shortage. Okay, so how can you play it in ETFs? Well, you can go out and buy SIL, SILJ, PSLV. AGQ is actually a great vehicle for appreciation. It's like an ultra, it's a 2x on physical silver. And because silver, percentage-wise, will run so much greater than gold over the course of the bull market. But I got to tell you, I hate the K1. I sure wish they didn't have a K1. It's a pain for taxes. So what about leverage ETFs? Again, and I make this here, leverage ETFs should not be long-term holds. In other words, it's a bull market for 5 years, I'm just going to go out and buy Nugget. Well, at those down draws, right, when Nugget goes up 80% and pulls back 50% of the 80%, you're going to get hurt in Nugget, right? Because it's leverage. So use these when you're seeing a run, and I tell you, or somebody else, or you read and you get better at it, and use it for additional leverage, right? Why am I going to sit in GDXY when they can't even keep up with GDX and pay a decent income? So I'm going to go put a fair amount of money in Nugget. Well, and Nugget is the larger caps, the more GDX. JNUG is the 2X for the bulls, for the juniors. And then a 3X GDX is GDXU. So again, always be careful with these guys. Own them, make some, if there's a 40% run in GDX and you get in GDXU, or you get in Nugget and you move up a lot, take some off the table. This is a trading vehicle, okay? Not something to just hold forever. So what about the downside? What do you own if you took some off the table and then you start to notice it to come down? Well, dust is the opposite of Nugget, right? It's a 2X bear on GDX. And what about a bearish junior? J Dust is I call it JDust, JST for JNUG. It's the opposite, right? The bearish junior. And look at this, guys. This is just always gets me. So I think this happened on 11. I saw it and I grabbed it. It may have just come out Friday morning early, but this may have happened Thursday. So Jeffries comes out and upgrades almost the whole sector. Look at this. You don't have to tell me. I already knew this. This is going to happen 90 days ago. They ought to. Some of these clowns they call analysts don't really get it, right? Triple flag. That's a beautiful little. What do you call it? The word I'm looking for is where they pay out money for other people doing the work. They loan them money, basically. It's like an income. Wheaton is in that category, which is a fabulous company. Royal Gold's in that category. Sandstrom, SAND. So it'll come to me. But look at this, Royal Gold. Kinross, another great little gold company. I don't happen to own it, but I probably should. Okay, I think it's in GDX, but don't hold me to that. Franco-Nevada, fantastic company. Barrick's a good company. They got a little more geopolitical risk at times than I like. Caliber Mining is another good one. Look at this. I have Endeavor in my list, EXK. G Mining Ventures, I'd have to look that one up. I don't know it. It's a Canadian. Lundin is a pretty good company. I don't own that one. Ocean Gold, is another one. But they upgraded a slew. So the only other thing I'll say to you guys and let you go is here's a trading. I mentioned TradingView. TradingView has some great chart. So silver miners, look at this from 2021 where you had a high and silver was back around 33. It looked like it wanted to break out. I don't remember the exact number, but I remember trading and being involved in the miners at this time and then watching this bull flag. That's literally what it is, right? Here's your flag. And then all it did, actually, your flag pole was like right up here. And look at this, it's been flying. And so when you get a big resistance line like this, you look for a breakout. Sometimes they come in back test. This didn't do a full back test, and now it's moving. That doesn't mean that it can't go in to a little sideways action. Clearly, if it came down here and broke this, that's bearish. But it could sideways or it can go like this, right? If in 2 days the thing could move up $3, pull back, move up, pull back, right? I mean, these things have the potential to go absolutely bullish. And that's the kind of market we're in. Sorry for the long thing, but remember, I gave all my normal just wanting income guys a chance. You didn't have to listen to this. Okay, with all that said about what I own, what I like, what am I going to tell you? You guessed it. I'm not a financial advisor. This is not financial advice. This is for fun and education. Sorry, fun and entertainment only. Hope you were entertained. See ya, peoples. Bye.